why Shiba Inu's cheeks are so darn squishy.
Oh my god! Are your cheeks squishy? Oh, look at the squishy cheeks. Do you keep snacks in there? Do you keep snacks in there? Yeah? You want a snack? You want one of these? What's that? Yeah, have a treat. Good boy. That's a good boy. Happy Valentine's Day, everybody. Oh, what, you don't like the treat? What's wrong? You don't like it? Yeah. Are you my little Valentine? Yep. Okay. Today we got a new CPI release, and it does look like it came in higher than expected at 0.5%. This is the highest reading we've gotten since October, with it having been declining with a 0.2% reading in November and a 0.1% reading in December, and it came back up, pretty much erasing all of the progress that we've made getting inflation under control thus far since October. I was talking in my video yesterday about how I noticed gas was going up, and this was probably going to be reflecting in the CPI reading, giving us a higher reading than last month, and that this would probably be negative for the markets because this means that the Fed is probably going to have a lot more work to do, and they're going to have to continue raising rates or at least hold them higher for longer. It looks like the market has kind of shrugged off this bad news though, and it has had a little bit of a pump today. Pretty insignificant if you really look at it, but it is going to the upside nevertheless. And the MACD is starting to curve to the upside with the bars right here converging on themselves. And as I was saying in my previous videos, there is this bullish divergence here on the MACD, which hopefully will start to play out here and will hopefully start making a new higher high. Looking here at the CME's Fed Watch tool, it looks like we do have a 93% chance of another 25 basis point hike in the next meeting, taking us to a 500 basis points or 5% rate. But now it does look like we are expecting for an actually higher interest rate hike because it was expected for the Fed to do a pause at 500 basis points. And now it looks like we have a 75% chance of another 25 basis point hike to 5.25% in May. And then it gets even worse than that because in June it looks like we have a 49% chance of yet another 25 basis point hike that will take us all the way to 5.5% or 550 basis points. Then it looks like it's going to be a pause and we're probably not going to be seeing any kind of cuts until at least December, apparently. Previously, it looked like we were expecting our first interest rate cut in November, but that was a cut from 500 basis points. And as it appears that the Fed does have a lot more work to do to get inflation actually down to their 2% target, we might continue to see these projections going up from here in the future, and we might actually see an expectation of a higher basis points than 525 by the end of the year. I don't expect a cut by the end of the year, even in December, and according to the Fed in the last meeting, I don't think they expect to do that either. Also, we are going to be reaching the debt ceiling, or we already have really, and they're going to have to actually raise the debt ceiling probably by July or something. And eventually the Fed is going to have to continue printing. They didn't seem to want to talk about it very much in their last meeting, but there's not really anything they're going to be able to do about that. In the meantime, I think they're going to be trying to get those interest rates as high as they can so that they can possibly get inflation headed back down towards 2%. But I don't think we're going to make it there because once they start to print again, inflation is going to come roaring back, and this time there's not really anything they can do about it. In my opinion, they're going to have to keep printing and there's going to continue to be inflation. So the best bet is to be invested into some assets because those are going to increase in price as they always do whenever the Fed continues to print insane amounts of money. Yeah, what? What is it? What do you want, down? Okay, you can get down. We'll lay in your bed. Good boy. Good boy. So in my opinion, I think we're going to continue to hear the Fed be hawkish because as they said in their last meeting, apparently they have a lot more work to do and inflation isn't coming down like they thought it would. As everybody always says, the Fed is probably going to continue to hike rates until they break something. And I think they're going to have to preemptively raise the rates and try to break something, because it's going to take a while for these interest rate hikes to actually have an effect on the economy. So even after the Fed has to start printing again, we might not even see the effects of this interest rate hikes that they've been doing up until this point, and we might not see a recession until later in the second half after they already have started printing. So if inflation is coming in hotter again, then why is the market actually pumping? Well, I think it's because probably everybody realizes what I've realized, and that's that the Fed is going to have to continue printing money, and there's not really much that they can do about it. The debt ceiling is going to have to be raised, and the US is definitely not going to default on its debts. And with us heading into a recession and the economy completely collapsing, where the hell is that money going to come from? It's not coming from taxes, so the Fed's going to have to print all the money, and the markets are going to go back to the moon. So as usual, I'm going to continue to dollar cost average because I still think that cryptocurrency represents the best opportunity to make life-changing wealth and to escape this traditional finance system that we've all been trapped in, because this fiat monetary system is going to collapse eventually, and I definitely want to be owning some kind of hard assets like Bitcoin and other cryptocurrency whenever that eventually does happen. And that might actually not be that far away because, like I said, the Fed is going to have to probably continue printing money, and I don't think they're going to get inflation down before they have to do that. So the government is going to continue debasing our currency until it totally collapses, just like every other fiat currency has throughout all of history. Let me know what you guys think in the comments. Is cryptocurrency a great opportunity to escape this system, or is it just overhyped and the government actually knows what they're doing? Either way, thank you guys so much for watching. I hope you have a wonderful day, and I'll see you next time. Bye. Oh, hey, I was just being chased by a bear. Watch out. Don't forget to hit that subscribe button and that notification bell too, because I don't want you to miss out on any important updates. And check out this video. Oh crap, I gotta get out of here.